Commonwealth Bank share price surges towards a record high. Regional Australia experiences massive house price falls. And two Madonna fans sue the singer for coming on stage late. Welcome to Fear and Greed Business News, Australia's best business podcast. It is Monday, the 22nd of January, 2024. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, after the show, you have an interview coming up today with Tobias Yao from Wilson Asset Management.
Yes, today's our kind of first full day back in the office. We have an interview straight after the show. Tobias, as you said, is from Wilson Asset Management. It's all about small caps. Now, small caps, companies that aren't in the top 50 or so, haven't had such a good couple of years, although Tobias did pick a couple for us middle of last year that did pretty well. He talks about those and a couple of others that he thinks might do okay. So great chat about where small caps are in the investment landscape as we head into 2024.
Yeah, it's a really good conversation for investors or just for anyone interested in hearing about some stocks potentially to watch for this year. It's coming up after the show. But the main story this morning, Sean, the Commonwealth Bank is closing in on becoming a $200 billion company, and a recent run in its share price means it's now more than twice the size of NAB and Westpac combined.
Yes, it really has become the market leader well and truly when it comes to the big four banks. Last week, Commonwealth Bank's shares hit an all-time record of just under $114. By the end of the week, it closed Friday at $113.28 a share. It's up about 18% since late October and has outperformed the other big banks, so the other big banks have done pretty well. This is at a time when interest rate rises are slowing, when the economy is slowing, and when the country's largest mortgage lender lost market share thanks to a highly competitive sector. But Commonwealth Bank has plenty of friends, as in fact do the other big three, National Australia Bank, Westpac and ANZ. In fact, Commonwealth Bank is now worth $190 billion, slowly catching up to the largest company on the exchange. That, of course, is BHP, which as of Friday was worth $233 billion. A ways to go, 20% or so to go, but Commonwealth Bank really is on a bit of a run.
Yeah, it certainly is. Can you break it down a little bit more, Sean? Why has CBA done so well? Is there one particular reason, or is it a whole range of things?
More the latter. It's really hard to pinpoint, but certainly markets generally have done well in recent months, and with banking stocks making up 20% of the ASX 200, they're hard to avoid if you're an investor, be that a retailer investor or a massive super fund. Also, the fear of large bad debt books as the economy slows and home borrowers coming off fixed rate loans, problems with them not being able to repay, all those fears, well, they haven't really eventuated. And if there are rate cuts, as anticipated this year, banks tend to outperform. Also, the big banks offer good dividend yields, which become even more attractive if bond yields fall. Now, bond yields would fall alongside falling interest rates. So if rates are cut, bond yields fall, suddenly these dividend yields from the banks look attractive. Since Commonwealth Bank is the largest of the bank, then it is the biggest beneficiary of those factors. It isn't all good news, though. Bank analysts warn that profit margins will be squeezed further. They peaked about 12 months ago, a little bit longer than that, and they're coming down again. So that's not so good. That will definitely work against investing in banks. Now, we always say on the show, Michael, that you should seek professional advice if you're going to make an investment, and we certainly stand by that. Indeed, in this case, don't go and buy Commonwealth shares on our recommendation. Go and find an advisor. But it's interesting just how well the Commonwealth has done.
Yeah, absolutely. Now, Sean, you've mentioned where Commonwealth Bank finished at on Friday. What about the rest of the market?
Well, the S&P ASX 200 finished up around 1% to 7,421 points following a number of weaker sessions earlier in the week. For the full week, the bourse was down about 1%. Now, the local market's still about 2.8% below its all-time high. That was set back in August 2021. If you want an idea of what's going to happen today, which we all do, of course, then take a look at Wall Street over the weekend. The S&P 500 hit a new record, fueled by the tech stocks. The tech-heavy Nasdaq is already at a record, and mostly it's about excitement around artificial intelligence. On Wall Street, Nvidia, Microsoft, and Facebook parent Meta platforms are the big winners so far from this AI trend. Now, Wall Street's got a bit of a problem, similarly to Australia. We have the big banks dominating our bourse. Wall Street has the big tech companies. And it is a bit of a problem because they have grown so much. So that's what's fueling the rise on Wall Street. It should mean that the local market does okay today, and particularly some of those tech stocks.
Now, Sean, we mentioned at the top of the show that you have an interview coming up with Tobias Yao from Wilson Asset Management, also in the Fear and Greed playlist today, and every Monday really is Fear and Greed the week ahead, which is a look at what's happening in the economy in the coming week with our resident economist, Stephen Koukoulas. And he is going to have a very busy week, a very exciting week for him, because markets globally, everyone's paying attention to the central banks. A number of central banks around the world set to announce their interest rate decisions.
Yes, indeed. The Bank of Japan, Bank of Canada and European Central Bank will all hold policy meetings this week. Since you mentioned these meetings, I do have a list in front of me. It's a little bit less relevant to us, but still interesting.
Go on.
A bunch of other central banks are deliberating this week. Malaysia, Sri Lanka, Turkey, South Africa, Nigeria, Norway, Ukraine, Uzbekistan, personal favourite, and Malawi. So there you go. For all the central bank watchers of the world, pretty exciting.
I was going to really put you on the spot and ask you to give me the list again, but this time in order of the size of their economies.
Oh, great question. So let's try it. Turkey, South Africa, Nigeria, Norway, Malaysia, Sri Lanka, Ukraine, Uzbekistan, and Malawi. Don't know, but I'm having a go.
I mean, the problem is when you ask a question that you don't actually have the answer to, it's right. Impossible to market. So you know what? I reckon that sounded pretty good.
I might have put Nigeria a bit further. Nigeria's a massive economy. It's quite incredible. Like, it's a real powerhouse in Africa. Anyway, there's also economic growth figures in the US and New Zealand. We're pretty excited about those. We get earnings from some of the big tech companies this week, including Netflix, Tesla, and IBM. In terms of commodities, Michael, Brent crude's trading around $79 a barrel. Gold's at about $20-30 an ounce, and the Aussie dollar's back up near 66 US cents. We've already spoken about Bitcoin's surge this year, given the US regulator green-lighted Bitcoin ETFs. That sent the value of the crypto unit up more than 20%. But the euphoria looks over, with Bitcoin down 10% since January 10. That was when the Securities and Exchange Commission signed off on the ETFs. While there was an initial surge, BlackRock's fund inflows quickly pushed past $1 billion. The enthusiasm has just waned a little bit. In fact, Bitcoin is currently worth around $41,600 a unit, which is just a bit below where it was before that announcement.
Okay, Sean, just very quickly before we go to a break, it's worth mentioning that we've started doing a bit of video with Fear and Greed now, haven't we? That we've turned the cameras on in the studio now every day. So if you head to, say, our Fear and Greed Instagram, follow us on there, or LinkedIn or Facebook or anything, you'll start to see a few more videos popping up. And you know what it's made me realise? Like, looking at you right now and looking at myself as well, that do we need to start dressing up now?
Yes.
I mean, it's too early in the morning to put on anything more than a T-shirt, right?
We only ever wear T-shirts. And I was looking at an Instagram reel over the week. In fact, Jackie, she pulled it out and said, look, this latest Fear and Greed, you are ignoring Michael totally. And I looked at it and I was ignoring you totally. I was looking at my phone or something rather, and I sort of forgot that the video was on. But then I looked at what I was wearing and I thought, oh dear, I'm going to have to do better than that.
Yeah, I mean, that's the thing. Suddenly we need to actually start caring what we look like, which, I mean, is probably a bit of a worry for you, isn't it? Sorry, that was a cheap shot.
No, it's good though. Good, no, I appreciate it.
We'll be back in a moment with the rest of today's business news. Sean, senior government members have been called to Canberra for an urgent meeting with Prime Minister Anthony Albanese to canvass new measures to really try and address the cost of living crisis.
Helping with sky-high energy costs is at the top of the agenda, and according to media reports, so too are the Stage 3 tax cuts, which will benefit middle and higher income earners, not so much low earners. The tax cuts, as they stand, will inject about $20 billion into the economy in the first year. That's 2025 fiscal year, and $24 billion the following year. Over 10 years, they're worth about $300 billion. The meeting on Wednesday afternoon comes 2 weeks before Parliament is due to resume. The next day, January 25, the Prime Minister is scheduled to deliver an address to the National Press Club about Labor's economic agenda. Obviously, given the polls recently. He wants to be on the front foot when it comes to the most important home issue, I think, for many people, and that's cost of living.
Now, this one is fascinating, Sean. Saudi Arabia is actively courting Australian miners and mining service companies as it tries to kickstart a $100 billion a year industry pretty much from scratch.
The government has just this month doubled its estimate of the country's mineral wealth, so this is the Saudi Arabian government, to $2.5 trillion US dollars. 2.5 trillion. We're not talking oil. We're talking mineral wealth.
Staggering.
It wants to attract about $200 billion US dollars of investment by the end of the decade, according to a story in the Financial Review. Now, the country's government has highlighted Australia's experience in building resource projects, saying it is both impactful on the economy and on society, and in Australia's case, responsible. Australian companies EV Metals and European Lithium have already announced plans to set up processing facilities in Saudi Arabia. Now, the big advantage of setting up there is that energy costs are so cheap. So they're doing that, but the country is looking towards Australia and Australia's experience in terms of building up its minerals business, which might be a nice little earner for us.
Yeah, indeed. Now, I mentioned this one at the top of the show. House prices in some of the booming coastal regions that benefited from COVID-19 have tumbled, with Byron Bay and the northern part of New South Wales up near the Queensland border really leading the way.
Yes, the median price of a home in Byron is down more than $600,000 from its peak. Incredible, isn't it? I mean, the median value is now $1.9 million, so it's still pretty pricey.
Yeah.
But it's almost 25% lower than earlier last year. Now, remember, Sydney house prices peak to trough fell about 10 or 11%. Melbourne prices were down much less, about 4 or 5%. Well, if you own something in Byron and you bought it at the top of the market, ain't looking so good now. Several towns in northern New South Wales, Lennox Head, Ocean Shore, Suffolk Park, have experienced big declines. So too Portsea in Victoria. Though, I'm going to say Portsea. I mean, it is beautiful, Portsea, no doubt about it. But the median price there is still above $3 million. So, you know, there's also been big losses in value in Lorne and Sorrento. Sunrise Beach in Queensland has also been hit hard. I mean, I kind of half feel sorry for those people, but not that much, to be honest.
It's just staggering that even when you look at, say, Byron Bay and you say it lost more than $600,000 from its peak, just even the fact that there was $600,000 worth of room to move there, and yet still it's nudging $2 million is just extraordinary sums of money.
Yeah. I don't know. Who has the money? Where do they get the money from? I don't know.
Well, not me.
No, nor I.
But maybe soon. It's aspirational. That's where the greed part of fear and greed comes in, right, Sean?
Yes, that's true. That's true.
Now, Sean, 2022, right, was the year of the coal companies with prices of coal, which is, of course, a sedimentary rock. Did you know that, Sean? I'm assuming you did. You seem to know most things about geology. They didn't have such a good time last year, but so far, even though we're only, 22 days into the year, 2024 has been okay.
Well, shares in Whitehaven rose 4% on Friday to their highest level in a year after the company said it's on track to meet full-year coal production guidance despite geological challenges and a major train derailment in December. Whitehaven said demand from Asia is particularly strong. The other big thing that's happening at Whitehaven, which is really interesting, it's shifting towards coking coal for steel making as opposed to thermal coal for power generation. That's helping the company win friends. Now, Whitehaven expects about 50% of its future sales to be coking coal for steel making. At the moment, it's about 90% thermal coal. The big reason for that is that last year it spent $6.4 billion buying BHP's Blackwater and Daunia mines. Investors seem to like that, and they're rewarding the company. Now, the other big coal miners are also doing better. Yancoal finished up nearly 5% on Friday. That was its highest level since early last year, and New Hope jumped 3%. So a bit happening among the coal miners.
Yeah, it certainly is. Mortgage brokers are going after non-mortgage loans with a surge in growth in business lending.
Yeah, mortgage and business lending are very different beasts. Mortgages are based on bricks and mortar security, pretty simple. Business loans might be based on invoices and longevity and assets that might include bricks and mortar, a lot more to them. For years, brokers have stayed in their lane offering deals for home buyers. But It's a competitive marketplace, and now more brokers are pushing into commercial loans. Figures from the Mortgage Finance Association of Australia show that the number of brokers writing both mortgages and commercial loans is up 60% over the past 5 years. Bottom line in this means more competition in that small business lending area. That should be good for customers.
Sean, a new survey from NAB shows that Generation Z, Gen Zers, really anyone born in the late 90s or after that, are being responsible with their money, cutting back on non-essential spending and really saving more in the face of the rising cost of living pressures.
Who are these people, Michael? I mean, any decent 20-year-old should be out there spending everything they earn.
Is that how you did it?
Oh, totally. Isn't that how you did it? You're at university there in Bathurst. You would have been spending everything.
I have been a massive nerd my entire life, and I'm pretty sure that goes also to kind of money habits as well.
Really?
So I had savings accounts and kind of everything. Yeah.
You're not a millennial at all. You're a Gen Zer at heart.
Yeah, I suspect so.
Yeah, they seem to be quite a sensible bunch. Australians under 30 are most commonly cutting back on eating out at restaurants, micro treats like coffee, snacks, and lunches out, entertainment, car journeys to save on petrol, food, and streaming services. Now, the trend is called loud budgeting, and I've seen it on TikTok, actually, and apparently it's being promoted heavily on TikTok. It's saving Australian Gen Zers about $450 a month, according to the National Australia Bank survey. As the bank put it, being cash conscious is officially cool. Now, that phrase is probably uncool because the bank said it, but we get the gist of it. What I would like to say, Michael, if you could choose, if you had to choose two of these to give up on, eating out at restaurants, micro treats, entertainment, car journeys, food and streaming services. So let's take car journeys out because you got kids, right? So you can't include that. So restaurants, snacks, entertainment, food, streaming services.
No, straight up, I would cut out restaurants again because of having young kids. Going to a restaurant with kids is an absolute nightmare. So I'm going to do that not just to save money, but to save my sanity.
Yes, right.
How about you?
I'd probably go the micro treats. I like eating out. I like streaming services. I like food. Yeah, I like coffee, but I've actually, we're on this health kick in my house. So I've given up. We're pescatarian, as you know. We only eat fish and veggies and stuff like that. Oh, God, it's boring. Anyway, leaving that aside, I could easily kind of, I don't really snack, so maybe that's what I'd drop.
Oh, just cut a streaming service. You've probably got 8. You've got 8 streaming services. Just cut one. Yeah, honestly,
cut half of them.
See,
it's important to have that streaming service that I never look at, though. Just in case.
Yeah, just in case one day you might actually want to watch it. You could just sign up for it then. But anyway, we will leave that to How Do They Afford That, which is a podcast where we discuss all kinds of budgeting related things. Just recapping quickly a story from Friday, Sean, the International Monetary Fund has called for more interest rate hikes and cuts in federal and state budgets to reduce inflation over the next couple of years.
In a review of the Australian economy, it called for comprehensive tax reform to fix weak labour productivity growth. It says the best outcome would involve relying more on the GST, taking pressure off personal income tax paid by workers, and cracking down on capital gains tax breaks. All sensible suggestions. Political dynamite. Nothing's going to happen. Thanks for telling us, the IMF. It also said that the Reserve Bank should push rates higher to make sure inflation is slayed. It didn't say slayed. I said slayed because last week you discussed how inflation is like a dragon. So we're going to slay this dragon. Most economists don't think interest rates will rise again, though much depends on the CPI figures due out in about 10 days' time. The IMF forecasts the Reserve Bank cash rate to average 4.4% this year. That's actually higher than what it is now. It's talking about the average this year. So that's talking about 1 or 2 increases this year, then 4% next year. Australia is one of 190 countries that make up the IMF, and the IMF's goal is to work towards sustainable growth and prosperity for member countries. I reckon they should have 189 countries. I think we should dump it if it thinks we should be lifting interest rates. There you go.
That is a big call from Sean Aylmer.
And just like the politicians changing the GST, the IMF will totally ignore me. which is fair enough too.
Yeah, I suspect
It's
so.
fair call.
Yeah, maybe. All right, turning to international news now, and the sparring between presidential hopefuls on the Republican side is heating up ahead of this week's all-important New Hampshire primary, with former President Donald Trump and former UN Ambassador Nikki Haley escalating their attacks on each other.
Yes, they had been fairly civil. Now, New Hampshire is Ms. Haley's big hope. It's full of independent voters. In these primaries, the Republicans and the independent voters get to vote on who should be the Republican nominee. And because there are so many independent voters in New Hampshire, Ms. Haley is hoping that it could launch, or at least give her some momentum to at least make a race of it. Obviously, Donald Trump is the hot favourite at the moment. Haley launched her most pointed attacks over the weekend, taking direct aim at Trump's mental acuity. Surely not. She did. His mental acuity and fitness to serve another term as president, after he appeared to repeatedly confuse Haley with Nancy Pelosi, the former House Speaker, during a rally that he held. He actually came out and he said Haley was in charge of security during the January 6, 2021 attack on the Capitol. Now, Pelosi, the Democrat, was obviously in charge of security. She was the House Speaker. But Trump got that confused and said Haley was. Her response, according to the New York Times, was pointed, and I quote, "My parents are up in age and I love them dearly, but when you see them hit a certain age, there is a decline. That's a fact. Ask any doctor. There is a decline."
Oh, savage.
Yeah, beautiful. And, sort of waxed Joe Biden as well.
Yeah. Two for the price of one. There you go. Final one, Sean. We mentioned this one at the beginning of the show as well. Two Madonna fans are suing the pop star, arguing that her late arrival on stage inconvenienced people who came out to see her, particularly those with families waiting at home and who had to work in the morning.
How very un-rock and roll these two are. Michael Fellows and Jonathan Haddon say they bought tickets for a Madonna concert last December at an arena in Brooklyn. Fellows paid about $156 for his ticket. Haddon bought two for about $293, according to the Times. I quote, "The terms and conditions printed on the face of the ticket stated that the musical performance by Madonna was to occur on December 13, 2023 at the venue commencing at 8:30 p.m. That's what they say. But they claim it started more than 2 hours late. Now, Madonna is famously late. She's always a couple of hours late, apparently. It started more than 2 hours late. It meant fans leaving the arena were confronted with limited public transport. They couldn't get home and they had to get to work the next morning. The class action suit, which seeks compensation for Haddon, Fellows and other fans, says Madonna arrived on stage 2 hours late the next night and the night after that. They have sued Madonna, the Barclays Centre, where the concerts took place, and the events company Live Nation. Well, good luck to them, but very un-rock and roll.
They should just tell Madonna that the concert starts at 6:30 p.m.
Yes.
And then she will turn up at 8:30 and everyone will be happy.
Yes.
As someone who has been kind of production managed like this for at least the last kind of 10 years that I've been married, I am told that things are starting at a different time to the time that they are.
No, does that really happen in your house?
And now I have to actually ask Sean, like, is this the real time that this starts or is it the time that you're telling me?
Oh, fantastic.
And it works. It works. I'm rarely late now.
But Chan works in productions.
Yeah.
So surely she'd be used to the whole rock star showbiz thing.
Are you trying to say that I am in fact a rock star, the equivalent of I'm my household's rock star?
You are the closest thing Fear and Greed has to a rock star.
It's a fairly low bar, isn't it? There we go. All right. Up next is the Fear and Greed Daily interview. Tobias Yao from Wilson Asset Management is your guest today.
Yep, all about small caps. Had a bad couple of years, small caps. Well, Tobias thinks that things might get a bit better this year, and he's given us a few tips as well.
It's up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. And don't forget to check out Fear and Greed the week ahead with Stephen Koukoulas as well. Thank you, Sean.
Thank
it's
you,
Monday,
Michael.
the 22nd of January, 2024. Make sure you're following the podcast and please join us online on LinkedIn, Instagram, X and Facebook, where you can check out all of our new videos and see whether we are dressed, in fact, appropriately. I'm Michael Thompson and that was Fear and Greed Business News. Have a great day.